in news. We have now Somal Mehta joining us. Somal, hi. How do you look at this, run up of Nifty yesterday to about 26,000? Do you see enough steam left for it to, go beyond 26,500?
Good morning to everyone. I think this has just started now. Uh, 26. We've closed above the previous swing high, which is a great sign for the markets. Previous swing high was around 26,010, and we have closed above that, which is a very good sign. Markets have taken support at 20 daily moving average. And from here on, the next target is all-time highs, which is around 26,250, 26,300 levels. So now the next level to watch out would be as targets on the upside would be 26,600, 26,700 in the medium to short term outlook. But overall, the trend remains positive. Buy on decline should be the strategy. Now the crucial supports here are 25,800 and 25,700. So that support level is very crucial at this point of time, and I'm not expecting that level to break on the downside. On the bank Nifty side, it has been outperforming for a little while. Couple of weeks back, a flag pattern breakout was there. 20 daily moving average support, and we've outperformed all the other indices. Bank Nifty has outperformed all the other indices. So I expect a target of around 60,000 in Bank Nifty. Crucial support would be again 20 daily moving average, which is close to 58,200 at this point of time. And I'm not expecting this to break on the downside. In fact, I'll be expecting an outperformance in Bank Nifty.
Outperformance in the Bank Nifty. Somal, your picks for this morning?
My picks would be the first one would be Bank of Baroda from the banking side. Bank of Baroda looks great to me from here. Stop loss would be around 281, and the targets would be around 300, probably even higher. The next stock would be Motherson. Motherson has formed a bullish flag pattern, broken on the upside. Trading above 20 and 40 daily moving average. Great setup for a short-term trade. Stop loss would be 109 and target would be 120.
Okay. Ashesha also standing by with a second set of stocks in news that you need to keep on your radar this morning. Ashesha, what do you have for us?
Well, yes. First up, let's talk about Adani Enterprises, and the company has informed the exchanges that they have received letter of intent as the successful resolution applicant for Jaiprakash Associates a resolution plan which is going underway. So on the back of this, keep an eye out on this counter. Infosys, meanwhile, the 18,000 crore buyback opens today. It will be open till the 26th of November. NBCC, meanwhile, has received a big order. This is from Nagpur for development of Naveen Nagpur Phase 1, and the order is worth about 3,000 crores. Now, given the size of the company, this is a significant order, and the company has already won quite a few orders over the last few days. So yes, 3,000 crore additional order that has come in for NBCC. Tenneco Clean Air, meanwhile, remember the company got listed on the bourses yesterday, and Goldman Sachs has acquired more than 21 lakh shares on the first day of trading itself. City Union Bank, meanwhile, on the back of an upgrade that has come in, ICRA has upgraded the outlook from AA negative to AA. So on the back of this credit rating upgrade, keep an eye out on City Union Bank as well.
Thanks, Ashesha, for that update. Sandeep Sabharwal joins us today. Sandeep, hi, morning. We saw this run up in IT stocks. What is your take on them? Do you think that the stocks are undervalued at this level, given the fact that we've seen a lot of correction happening since the beginning of the year?
IT sector in general has been an underperformer, and it's very funny actually if you see that it's been played as an anti-AI trade. So how does it react to Nvidia's good earning and again a start of the AI story sort of rally again if it starts? So that's something we need to see. So the good part of these companies, they are still significantly cash generating and dividend paying. The bad part for equity investors is that there is no visible pickup in growth in any significant manner. across most of the companies. Like there'll be some companies which are still showing growth, but across the board, the IT sector, the Indian IT outsourcing sector is not really growing. So I would think that the rallies in this sector will be more either trading rallies or rallies which will generate like high single digit, low double digit kind of returns and then stall. Till at some point of time we see a growth pickup, which doesn't seem to be visible at this stage.
Sandeep, how are you playing the financials? I'm curious to know that because we seem to be set up very well today. Typically, what we've seen is when we've touched the 26K mark, we've seen some pressure from global markets. Today, we're not seeing that. So likely you'll have these two engines, IT and banks, doing well. So I'm trying to get a sense from you. You called out that banks will not do as well, maybe a year or so back when the repo rate cuts were still taking full effect. Give us a sense where you stand on where banks is concerned, PSU versus private.
So I think right now we are at a stage where, so a year back, my view was that as the cut cycle was playing out, NBFCs could do better than banks, and some of the NBFCs we had at that point of time, like L&T Finance, etc., they have done very well. Because banks initially take a hit when the rate cycle comes because of their huge amount of CASA deposits and the repricing of loans is not as rapid. Now that phenomena is over. Now lower rates, GST cuts, etc., are leading to a pickup in credit demand. And incrementally, the repo rate cuts, which will come from the RBI, they will be absorbed. Like let's say in December, RBI cuts 25 basis points. So it'll be after a long time. So the earlier rate cuts would have got adjusted, and it'll have maybe 2-3 basis points impact on immediate NIMs, but that doesn't matter so much. So the large private sector banks, I believe, will do well, which includes ICICI, Axis, HDFC, not necessarily in order. IndusInd could potentially come back with the change in management, but I think it's a work in process. It will take time. And from the PSU side, I think the PSU bank should also do reasonably well. So SBI is something which we own. I think that the re-rating cycle has started after a long time, and it still offers the 15-20% rate potential. And NBFCs in general should still do well.
Okay, interesting. Sandeep, I heard your view on IT, but what's the AI play when it comes to India? Far and few, but do you think for now it's only data centers, or would it be via consumers, or power or energy names?
The AI-led demand will have various components. So I think we are not really on the chip side. We are so the data centers are being set up, but then data center is a huge capital-intensive business, and so although there is excitement about companies setting up AI data centers, I'm not sure of the ROI of those investments. Let's see how that plays out. But the companies setting up those data centers and the increased electricity demand because of AI boom, which is not reflected in India at this stage, but globally, that's also a story. So I think across the board, there will be plays, but in India, it will take time for these to play out. So that's how I see it at this point of time. So direct plays, there are few companies who are being played as direct plays who are setting up data centers, and they have been early movers. But as the larger companies also come into this, how that affects those companies is something we need to see.
And okay, hold that thought. Some update from the Supreme Court with regard to IHFL case. The Apex Court has questioned the friendly approach of the CBI and MCA in probing allegations against Indiabulls Housing Finance Limited, which is now Sammaan Capital. Ankur here with more details on that one. Mind you, the stock was down 13% in trade yesterday. So that perspective, important. Ankur.
Yes, Sammaan Capital has defended the allegations put on them, which happened in the court. In fact, the company has mentioned that none of the allegations which were leveled against them have been proven either by investigative agencies, ED, CBI, EOW, or by the regulators, be it RBI, be it SEBI, and even ED is investigating the same. The company has said that it is listed entity and it has more than 4.5 lakh shareholders. The company has investors like LIC as well as BlackRock among them, and therefore the company follows all the due procedures which are there in the all these matters pertains to the allegations which were put on the company that there was routing and rerouting of funds through shell companies, and it happened on a PIL which was filed in Supreme Court. In fact, there was a clarification during the hearing which was sought by the court, and Supreme Court has said that it has made no comments, and I repeat, it has made no comment on the merits of allegation against Sammaan Capital. All these observations were made during the interaction with the investigative agencies in the court, and finally it has been decided there will be a meeting which will be conducted in 2 weeks, and the direction has been given to officers of CBI, ED, SFIO and SEBI to jointly look into the allegations. But on the other hand, company is vehemently denying it, and even Mukul Rohtagi, who is representing the company in the court, has mentioned that there is no allegation which has been proven by any of the investigative agencies.
Well, a 13% kind of a free fall almost on Sammaan Capital. And Sandeep, that's the thing, right? And you got to take your bets so carefully when it comes to the NBFC, or for that matter, any sector, for in that sense, because you never know when you're going to run into any sort of regulatory hurdle, if you will. Would you say with NBFCs, stick to the top tier?
I think you have to stick to the top tier because of the fact that we are never sure of the asset quality norms, and the promoter entity becomes extremely important. So I think the large corporate funded NBFCs tend to be the better place because there it's highly unlikely that we'll get into governance concerns. So if there's a large NPA cycle which is impacting everyone, then obviously no one can escape from it. But we can at least be safe from the governance related issues.
Okay. What we'll do is we'll
in the banking space, we spoke about it a bit. So your SBIs and the ICICI Bank and HDFC Bank. How do you look at these three companies?
I think HDFC Bank would be my top pick because it's been trading in a range for a little while. ICICI has already bounced back. Axis Bank is already on the way up. So HDFC Bank has a very good risk-reward ratio at this point of time, and that will be my top pick at this point of time in the private banking sector. PSU banks, there are a lot of names: Bank of Baroda, Bank of India, Canara Bank. But in the private space, the large caps, HDFC banks looks great to me. 973 would be my stop loss on the downside, and my targets would be above 1050, 1080 levels in the medium term outlook. In the very short term, it's been trading above 40 daily moving average, and that looks very convincing to me. And I think the next rally on the upside is on the cards.
Okay, banks and more banks. And here's Morgan Stanley talking about banks. They remain optimistic, of course, saying that with improving loan growth prospects, margins will recover from here as retail and SME loans will be driving growth. Mitali joins in from our research desk to highlight the note.
Right, so Morgan Stanley remains positive on the Indian banking sector, and loan growth across banks is improving, said by Morgan Stanley, mainly driven by the retail customers and the SME borrowers, while the deposits are also growing steadily, with banks putting more efforts to improve their CASA and the current account balances. Margins have been under pressure for some time, but for now, most banks have their NIMs bottomed out and should start improving from the second half of FY26. Asset quality will remain strong, and unsecured loan stress is also reducing, and credit costs are expected to come down further in the coming months. Banks are also becoming more efficient as they have started to invest more in the technology and automation, hence improving their operating leverage. Competition still remains tough, especially in the corporate lending and and secured retail, but it remains manageable. So overall, most banks expect broad, balanced loan growth and across the segments in FY27, supported by regulatory easing and a lower interest rate environment. Now we see that the individual stock ratings and the target price set by Morgan Stanley. First in the list is HDFC Bank, where the brokerage has given an overweight stance with the target price set at 1225 rupees. Also for Kotak Mahindra Bank, overweight stance, target price 2600 rupees. ICICI Bank with the target price set at 1800 rupees, and Axis Bank also overweight, the target price set as 1450 rupees. Also they have given equal weight the stocks like SBI and HDB Financial Services, setting the target price as 1025 for SBI and 805 for HDB Financial Services.
Okay, thank you for that, Mitali. Sandeep, clear signs of loan growth picking up. In this environment, do you have any specific tilt to specific stocks? If you can give us a sense. HDFC hasn't really done much over, maybe in terms of growth, maybe over the last 2 to 3 years. What's the sense now? Also, Kotak valuations looking far lower from the 5-year averages in terms of price to book. Is that at all something that you're liking?
Yeah, so among the banks, large banks, we own ICICI, Axis, and Kotak to some extent, more of ICICI and Axis, and I think both of them still have upside potential. We don't own HDFC Bank, but I think HDFC Bank, because it's spent a lot of time in a range, etc., and last quarter results were encouraging, I think it's setting up for a rally. But because it's such a FI dominated stock, so what typically happens is that it will require some FI flow reversals to actually do much better. So I think that's something we need to watch out for. And SBI already talked of that. I think it started its re-rating journey, and I believe that the re-rating journey still has some way to go. So even SBI should do well. Smaller banks I normally don't buy because they are not the favorite of depositors as far as CASA deposits go. So the smaller banks actually losing market share vis-a-vis the larger banks. So I think that gives them a distinct competitive advantage other than their size over the long run.
Well, other than, of course, the relief which could kick in for Sammaan Capital, now that the company is saying that they presented the case in the Supreme Court which pertains to a former promoter and that the IHC deal is back on track. The other stock which could be a dhamaka one today could definitely be NBCC. I mean, look at the quantum of that order. They've backed order worth about almost 3,000 crore rupees from the Nagpur Metropolitan Regional Development Authority. A lot of development happening in that city, and NBCC clearly seems to be bagging that. But Sandeep, you've been tracking the infra space very closely. In the past, we've had chats on NBCC, NCC, etc. as well. Anything that you still like?
Yeah, so the infra sector has gone through an interesting phase where many of these companies have been winning orders, but the execution was poor due to various reasons. First, last year's elections, delayed payment release, then this year's monsoon, which was pretty severe. So that has led to a stage where many of these stocks are quite cheap. Now, the road-focused companies are something we need to avoid because on the roads NHAI side, although they have been talking of a lot of tendering, that's not happening. But diversified construction infra companies, some of them are very cheap. So I think NCC has disappointed 2-3 quarters, but from here on, I believe given the order book, they should do well and the stock is cheap now. Ahluwalia Contracts is something which we own, which also had a slump in execution, but this quarter results were very strong and they have indicated strong growth ahead, and it's not very expensive on valuation. So I think these are, actually this is a segment which is right now ignored largely by investors and could see a decent comeback because they are also natural beneficiaries of a easier monetary policy cycle which reduces their interest rates also.
Kunal, infra plays, what are you liking within that pack?
So I think NBCC, I think after today's move, today's news, I think could finally break out of that range. The stock over the last 1 month had been stuck into a range of 110 to 118 broadly on the upside. That could be interesting, a potential breakout pick. And I think if that happens, if the stock breaks past about 118 mark, then we could be looking at least an 8 to 9% further up move into the stock price. NCC is something which I think on the short-term charts has been a huge underperformer. But interestingly, the stock has come back towards almost like a 52-week low, closer to that low the stock had made in 2025 start when the stock was almost at 165.70 levels. It's now currently at 180 marks, so which means it's very close towards that kind of a breakout point. In the previous rally, the stock had jumped up from 165 odd to almost 225, 230 levels. So which means potentially we can expect maybe a 10 to 15% swing upside into this stock as well.
I want to check in on some of those hospitality names as well. Look at Indian Hotels, that's at 719 right now. The 52-week high, of course, was much higher at about, I think, 894 thereabouts. But there's also news flow coming in now on Mahindra Holidays. The fact that they've entered leisure hospitality, one needs to understand this a little bit better, with an investment of about almost 1,000 odd crore rupees. Sandeep, a lot of capex now and a lot of diversification happening within the entire hospitality space. News in Mahindra Holidays. Just the other day, you had Indian Hotels get into the wellness space with the acquisition of a 51% stake in Atmantan. But what do you do with the investments? If someone were to look to add positions to their existing hospitality names, is right now really the time, or should they be trading out, in fact?
No, the overall space is well placed for the next 2-3 years also, because demand is still outstripping supply. So there'll be quarters in between where there could be some slow growth, etc., which gives investment opportunity actually. And among all these companies, I think it's Indian Hotels which stands out because of the way they have gone about executing their strategy, the way they have generated huge cash flows, moved into the managed hotels part, and are building assets across the board, which will actually do very well long term. So the stock went up, it's consolidated, corrected a bit. We can't say that the valuations are cheap, but then I think it's tough to get very cheap valuation in this sector unless we start a downturn. So I'm positive on Indian Hotels. I think strategically it's very well placed. It should still do well.
Worried about the sizable capex that they would get into, perhaps?
So capex relative to their cash flows is very limited. So if you look at it, I'm not sure exact figures, but they must be generating at least 2,000 crores of free cash every year now, with 3,000 or 4,000 crores already lying on their balance sheet. So I don't think capex is such a big concern.
Okay. Now, there's going to be a listing, of course, today. Fujiyama Power is all set to make the D-Street debut. Kanishka is here to tell us what the different listing scenarios could be for the stock. How could it play out? Kanishka.
Well, yes, Fujiyama Power is in focus today because the company lists on the bourses today with an issue price of 228 rupees. However, the grey market premium right now shows just in a very flat opening is what is expected for from the company. Just about a 3 rupees premium, that's just about 1.3% upside from the issue price. So expectations are largely muted as far as the listing for Fujiyama Power is concerned. Now let's break down the possible outcomes. Now, if the stock lists really weak, 20% discount would put the share at 182 rupees, and even at a 10% cut, the price would come to 205 rupees. Now, at these level, valuations look more reasonable. The post-IPO PE would fall to 20 to 23x based on post-issue EPS of 8.8 rupees. If the stock lists flat, that is at the issue price of 228 rupees, it would list at 25.9 times the PE, right in the mid-range of its valuation band. Now, if the sentiment does a price on the positive side, if we do see a positive listing, a 10% premium takes the stock to 250 rupees, and a strong 20% listing it's to 273 rupees. Now, this would push the valuations as well to the higher zone of 20 28 to 31 times, which may limit the immediate post-listing upside. So yes, the valuation spectrum ranges from 20x to at a weak listing to 31x at an optimistic listing. So yes, watching out for Fujiyama Power. A flat, muted listing is what the grey market premium is suggesting, but let's wait out for how it opens.
Okay, thank you for that, Kanishka. Somal, let me come to you, and I'm not going to talk about the IPO there. Let me first come to you with regard to some cap good plays, because that's the segment which we're dealing with. Cap goods power, anything that you're liking within this space overall as well as stock specific?
On the power side, I think CG Power looks good to me. CG Power definitely has broken out of a good consolidation about the 200 daily moving average. It's been consolidating in the very short term in the last couple of weeks. It's been consolidating, but very crucial supports around 717. So CG Power definitely looks good for in the short to medium term outlook. In the medium term, my targets would be around 810, 820 levels and crucial support at 200 daily moving average. And I'm not expecting the stock to go below 200 daily moving average, which is 697.
Okay. Let me come to you on IPOs, Sandeep. Any IPOs that you're liking, that you're subscribing, or would you completely stay away from the fact that some of these IPOs may be tricky?
Most of the IPOs are tricky. Unfortunately, the valuations at which they are coming are too high. And there are two different markets today. One IPO market where small and medium companies are getting exits or are able to IPO at high valuations. And then there's a listed space of small and mid caps of very established companies, which are actually cheaper than those companies. So I think for discerning investor, it's very clear where you should be investing in. So I'm largely not enthused about IPO. So I think the last IPO which looked okay to me was LG, and nothing after that.
Got it. And Sandeep, just your take with regard to the way we've seen the Grow IPO list and the post-listing pop that we've seen. There's been so much conversation around it. I'm just curious to know your take. We're currently sitting 50% above the IPO price, and therefore there's been considerable upside already built in. At the top, we nearly doubled up, so it's come off 25% from the top. I just want your take.
I think there's blatant rigging happening of stocks, and I don't think why it doesn't get flagged off post-listing. We saw the same thing in Urban Company, the same thing we saw in Grow. Straight line up moves where the retail investors think that this is a stock they should not miss. They come in and then the stock starts correcting, and then the stocks correct 20, 30, 40% from the top and then languish at those levels. So I think the same thing is happening. Unfortunately, the monitoring and the post-listing monitoring is lax in many of these cases. So retail investors should be careful. Post-listing where stocks just run up, they should just avoid FOMO and not try to buy them at absurd valuations.
Okay, Sandeep, we'll let you go on that note. Thanks as always for your time. We'll see you again soon. Getting set then for the market open, or actually the opening rates have come in and somewhat of a relief after the US equity handover, and we actually were the ones to be the first ones to rebound. Held out quite okay yesterday, and today we are a good 0.5% higher in trade. We'll give those rates some time to settle down, and in the meantime get in some mid-cap trading ideas. Somal, what's on your list?
I have, again, on the banking side, I have one more. Banking is doing really good, so I want to focus more on financials and banking. Union Bank, one from the PSU banking side, has formed a flag pattern, trading above the averages, already on the uptrend. And I think this should continue. And my targets would be much higher, but in the very short term, stop loss would be 150 and targets would be 163.
Kunal, your picks within the mid-cap space?
So that'll be a buy on Baroda Motherson. Yesterday the stock